So, good afternoon, everyone. Thank you very much for joining us to the Mayfair Investment Club E-Series talk. It's 1 p.m. now in London, and we are about to start. So, today we're here to talk about the shape of global economy going forward and what will actually change. We have two guests today, Dr. Cornelia Meyer, independent energy expert and chairman, MRL Corporation, and Samir Ceric, investor, entrepreneur, philanthropist, and public speaker. So a little bit about the session. It will last 1 hour. The first part will be the 30-35 minutes for panelists to talk, and the second part is around 20 minutes for Q&A. So I would like to encourage you to ask questions as we want to engage with the audience and know where to go. And if you're asking questions, please specify either you address it to particular panelists or it's general question to all panelists. If there anything important we missed, no worries. We'll send you the follow-up email and you can ask some extra questions. We'll answer it. So now let me introduce my co-host Samir, and he'll follow the conversation forward. Samir, please.
Thank you, Tatiana, and welcome, Cornelia. It's a great pleasure to have you with us today. And welcome on board of Mayfair Investment Club. It's great to have somebody with your amazing experience to join the board and to really work alongside our core team on the sort of future ambition of the club. Now, you and I met some time ago at the Sarajevo Business Forum, where you actually chaired the entire conference and probably managed to keep the entire two-day conference to time, including kicking me off the stage when I moderated a panel on the investment, which I think what kind of bonded us in the essence, because we both sort of enjoyed the time spent in Bosnia and Sarajevo, but also the aftermath and sort of our subsequent meetings and gatherings in London. So I thank you once again for joining us today, and I now give the floor to you.
Well, thank you so much, Samir. And you're right. We are sort of, you and I are a Swiss-Bosnian UK joint venture, which I think is quite unusual and quite great. And with Tatiana, we have the Ukraine in there as well. Yeah. So what I will do is I'll first lose a few sentences about where we are right now. And then I would like to talk about 5 mega trends of where I see the world going. So where we are now, most major economies are either in lockdown or emerging from lockdown or have been in lockdown. Air travel is suspended widely, borders are closed. There's tremendous uncertainty about how we come out of this because we don't know. This is a virus. This is a virus attacking humanity. So this is essentially RNA against DNA. So until we have either a vaccine, and my friends in the pharmaceutical industry tell me it's less a vaccine, it's more what we did with AIDS, which is a medicine that can really remedy once you've caught it very quickly. Until we are there, we have no clue how we come out of it, how we will recover. Will we come out of lockdown, go back into lockdown, come out? Will we have a V-shaped recovery, U-shaped, or a series of Ws? So this is really unprecedented. We're used to natural disasters, and they're both regionally as well as time-wise limited. Then we're used to wars, which also have a certain regional limitation, and not all parts of the world are all affected at the same time. And we're used, obviously, to the systemic shocks as we saw it in the financial crisis. But so this is bigger than anything we saw, and it will have big ramifications of where we go from here. And this is how I come to the 5 mega trends. The first one is we are inserting humongous amounts of stimulus. So far, we have inserted between 8 and 10 trillion, depending of dollars, depending on how you measure it. And this is really unprecedented. It's also necessary because if the Great Depression taught us one thing, the worst thing you can do when you get into such an enormous, epic downturn is to sit there, do nothing. But it also means that government spending is going way up, at a time when obviously the tax collections are going way down because everybody is either laid off or furloughed. So we are having huge, massive deficits going forward, and they're at the government level, at the nation level, at the state level, at the regional level, and they're at the global level, and they're at the company level, and they're at the personal level. Now, especially when you look at the US, you came into this with already a big debt overhang. So the question is, how are we going to go out of this? There is the big question on inflation versus deflation. We've seen Japan throwing money at things for about 2 decades and not going anywhere, just ending up in deflation. And as long as asset prices, especially input prices like oil, are so cheap, there is big deflationary pressures. But coming out of this, there will be a lot of money chasing very few goods, which would tend towards inflation. And then when I look at food, that may have inflationary pressures. If I look at oil right now, yes, we've been with WTI negative, but as so many oil wells are shut in, and as this is not a light switch, once we need more oil again, well, we may well see oil prices rise, giving inflationary impetus. So the judgment is out. In the short term, it's clear, deflation. In the long term, anybody who tells you where we're going is very, very smart indeed. And then with the second mega trend is governments become major stakeholders. They become stakeholders, you know, either in equity positions if they bail out an airline and put themselves on a board, or as guarantors for debt, or as extending loans. So even in free market, laissez-faire economies such as the US, it will look a little bit more like Russia because the state is going to become a huge stakeholder. And that will also have ramifications on how economic activity takes place. Then I would say I see 3 different patterns. I see a pattern in production, manufacturing, a pattern in consumption, and a pattern in work. In production, we see something continued that we saw ever since Donald Trump started to have his trade wars with China. We will see a regionalization of supply chains. That was anyhow a trend, but now where in many things, especially pharma or food, people are getting concerned. They will want to localize supply chains. So we will see supply chains realigned in manufacturing, in food, pharma is manufacturing, but everywhere we will see them realigned. Then we see the consumption patterns. You know, everything has moved online, and that will change how we consume going forward. Other things are important. When you saw a very good indication was the luxury sector, when you saw that L'Oreal did very well because people still needed shampoos. But LVMH did badly because when you stay at home, you just don't need a $2,000 handbag. I never needed one, but apparently that's something very important to a lot of people. So that it will change how we consume, but it also has ramifications for the companies. Yesterday, the Amazon numbers came out and they were very disappointing. Actually, net income was down, although the revenues were up, in double digits, 26% or something. Net income was down because the cost of doing business with social distancing and closed borders became just so much higher. So this will change. And the fourth one is obviously how we work. And that's huge because when Bloomberg did a study and they said coming out of the crisis, they think that more than 40% of the workforce will either full-time or part-time work from home. That is very different. And that has ramifications for the energy sector in terms of, how much electricity we need because we do so much more computing from home. In terms of, especially in the US, we're not going to use a car to get from A to B to work when we stay at home. So that will take down the demand for oil, which is something actually Bernard Looney, the CEO of BP, is very worried about that. And it will change other sectors like real estate. You look at commercial real estate, we will need less commercial real estate. Now, you know, in a low yielding economy as we had it with very low interest rates, real estate was one of the big investment opportunities for pension funds, for insurance industries, and so on. So they will be badly hit when the commercial real estate sector is hit. So this is very bad. The fourth trend is what I look at the country level, the rich and poor level. The IMF has so far uses its $1 trillion that it has, you know, for fast responding facility. But 100 countries have already asked for, you know, having to pay less interest rate, not having to pay, defer interest rate and principal payments and so on. So that's very big. And what we haven't really figured out yet is how Corona will hit the emerging world, or especially developing countries. We have inadequate healthcare systems, but you put that into Nigeria, into failed states like Syria, it's a lot worse. So because they don't do testing, when I look at my region, which I mainly deal with, which is the Middle East and North Africa, we see very few. We see in the emerging countries, you know, in the Jordans and in the whatever the Egypts, we see very few cases, but we don't see few cases because there are few cases. We see few cases because there's no testing. So that will have huge ramifications on their healthcare systems. And they're going to be hit by another thing which is totally underreported, which are remittances. If you're Egypt, if you're Afghanistan, if you're Pakistan, if you are Mexico, if you're the Philippines, a huge chunk of what you receive as a government or the foreign currency inflows to your country come from remittances. They are, according to the World Bank, 750 million. 750 billion at this point. According to my model, they're more like $1 billion because so much is in the shadow economy, but still gets, you know, sent home. So that's you know, that is about as big as the facility of the IMF. So if you hold that against each other, that's quite a dire picture. So the rich world will need to see how it deals with the developing world. The problem we have is because of high spending, low tax revenues, and inequities in their own countries, there will be a huge push against financing the IMF, against bilateral development aid. So that's something we really have to look out for, also in the interest of the rich countries, because if we let the rest of the world fall off a cliff, guess what? That will bring more refugees, and it will bring refugees and migrants who, by the way, have not had appropriate healthcare checks. So there's a wave coming towards us. And then the third one is the inequality within countries. We see that in populations, you look in the US, maybe you look in any country, that the poorer populations, the poorest segment of the population is more affected. Why? Because in many countries, they don't have healthcare, they don't have health insurance, so they have to go to work whether they feel sick or not. They don't have huge sprawling mansions. So if you are a worker in a textile mill and you live in a slum in Bangladesh, you may have 10 people in a room. Well, tell them to do social distancing. It's an interesting concept. You may not have good running water, so tell people you have to wash your hands. Well, how can you wash your hands when you don't have water? How can you afford soap when you can't even afford food? And a lot of these people are day laborers, so they live hand to mouth. So these inequalities within countries will be exacerbated in the rich world, in the US, in the UK, as well as in the emerging world. So when we look at this, we are coming out of a world where we will probably see, certainly in the short term, more antagonism as you regionalize supply chains. You know, there will be losers of the ones who were exporting so far. As people are economically within countries falling off a cliff, that is going to have just ramifications for the social cohesion of these countries. So in other words, we are going into a very, very difficult world. And as much as, you know, I would love to be fiscally prudent, I applaud the governments who throw the billions at the problem, because if we don't do, we might well end up in something like the Big Depression. If I look at unemployment rates in the US, well, more than 30 million people have lost their jobs over the last 6 weeks. That is unprecedented. Over about a quarter, of course, the country was smaller during the Great Depression, it was 700,000 people. So with this very happy, gloomy outlook, I'm handing back to you, Samir.
Thank you, Cornelia. It's very, very insightful. I mean, I've got quite a few questions already based on what you just said, but I want to take us back before a couple of technical questions on what you said to our conversation from the other week when we talk about globalization really being tested here off the back of the coronavirus, and in a way pushing many countries and many regions to collaborate and be self-sustainable and self-sufficient. Do you still feel now, 6 weeks on of this pandemic, that this is really going to be a major shift when it comes down to the globalization as we know it, or let's say as we knew it 2 months ago? Versus
absolutely. And as I said, I think it's a trend that has started. That has started with the US administration becoming a lot more belligerent to its trading partners. And I will not forget that about a year or so, 2 years ago, Jeffrey Immelt, who was at that time, I'm ex-GE, so to me, it's my mothership. Jeffrey Immelt was at that time still the CEO of GE, said, well, you know, we might have overdone it with globalization. And I was part of that push because I built the manufacturing base for GE Energy in Asia Pacific. So I was very much part of, I'm a child of globalization. But I think we will manufacturing because of trade woes and because of what's happening. And especially when I look at essentials such as PPE equipment, pharma, you know, we depend for the input into pharma to about 80% on China and India, and that cannot be. And when I talk to my friends in the pharma industry, they tell me we really need to make sure we have regional centers. Food, very important, because we've just seen how fragile these global supply chains are. Now, we can knock these global supply chains all we want. They helped, you know, go against hunger. These global supply chains in the food sector put millions of people out of the potential of going hungry, and the other supply chains put hundreds of millions of people from destitute poverty into the middle class. But on the other hand, in the OECD economies, in the Europes, in the Canadas, and in North America, and in the US, they obviously had caused hardship among certain parts of their populations.
So is your prediction, and we've discussed this element of obviously agriculture and the food production in many countries around the world really losing in terms of the trend, and most people from the rural areas, villages, descending onto the cities in a sort of hope for the better life. And the fact that the real estate around the world, when it comes down to villages and rural areas, and I know as a fact in former Yugoslavia, whether you go to Serbia, Bosnia, or Croatia, everyone wants to be in the city. Everyone is abandoning incredibly lucrative opportunities to do food production and agriculture. Are we hopefully going to see that trend reversing now, and people actually realizing that that is actually a good business model and you can have a very, very lucrative venture if you do that?
I think we will see that, and we will also see that as especially in the developed world, a lot of people, my choice was, do I want to be in my small flat in London, or do I want to be in Switzerland where I'm in the country and I have grounds and I have more space? A lot of people will see how good it is to have some space. So I think you will see a trend of maybe moving out of cities, but we will still need the cities. I mean, the cities are still are still a big thing, and you will not, redo urbanization overnight, but you will see that it becomes a lot more attractive to live in the country, and that will again shift. I'm again thinking insurance companies, right, who were hit like a meteorite by this crisis, but they invest a lot in real estate. When you look at insurance companies, when you look at pension funds, they will probably also shift. They will also shift their portfolio around a bit as it becomes more attractive to live in the country. And again, it's also telecommuting that made it possible. We had to live in London in order to go to our banking jobs, right? Mm-hmm. We now don't need to live in London to go to our banking jobs. We have to be in London to go to the BBC for an interview. Well, they now come to my home in Switzerland via Skype. It's very cool.
Fantastic. So many claim that 21st century is going to be the century of pandemics, and this is perhaps one of a few or couple that we will see over the course of the next few decades. Now, you mentioned the fact that we cannot, as the world, rely on the supply chain coming from China. And only yesterday, I was having a conversation with one of the sort of Middle Eastern kingdoms that is interested in setting up their own infrastructure around PPE kit in particular, in order to service the entire Middle East. And obviously the governments over there are very pro local so production lines, because not only that will create the jobs, but will really ensure that this equipment arrives to the right places on time. We're seeing a disaster in the UK. I think only yesterday on one of the CNN links, there was a huge scandal. The many ventilators that arrived from China were not technically fit for purpose, so they're being returned. NHS and the British government are incredibly slow bureaucratically dealing with the situation, since we are losing people, we are losing NHS staff. Bureaucracy is standing in the way. I mean, so much so that, to be honest, I'm at the point of wanting to call Boris Johnson and get him in touch with my partners in China to really tell him what's going on, and why the way of non-expectancy of payment of the equipment that is supposed to be here is not something that can really be orchestrated right now. This is the time of war. And in the times of war, you need a leadership that understand what it means to guide your nation and your region through the war-torn sort of environment. And I just feel around the world, we have a very few leaders that understand the situation they're in, and the entire administration is failing the systems they're supposed to serve and the people they're supposed to serve. So question to you is, the Middle East are making already a sort of advanced move ahead of anyone else, to my knowledge, of setting up their own infrastructure. They've reached out to us to try and find a JV partner from China who could really do the know-how transfer and do sort of a business venture with them. What's your sort of prediction, and what's your kind of recommendation to many out there who are struggling?
Well, I would say there's one thing. I would say, yes, the Middle East, the GCC countries, yes, they are reaching out. But we also need to make sure the Middle East is bigger than just GCC. We have the Levant, we have Iraq, we have North Africa. So yes, GCC has the capital. It also has the sovereign wealth funds, so it has the cash ready to go into this. But these countries, especially UAE and Saudi, they have been thinking for a long time about sufficiency in all of these things, especially also food sufficiency. They've been very, they've been thinking about those things. So yes, I think it's good that they are. When it comes to but you see, it's easier if you have a clear command and control structure to do these things. If you are the UAE, it's very clear who is the king. It's very clear who is the prime minister. If you are Saudi, it's very clear who is the crown prince. So it's a very clear command and control structure, and you can move ahead quickly, which is one of the things that was that helped China contain the pandemic, because they're a command and control structure, and they could tell people, you now do X, and people would do X. This becomes a lot harder in a democracy where you have so many stakeholders, and you see what's going on in the US between the states and the federal government, and whoever you want to side with, it's not helpful that they are not pulling the cart in the same direction. You see similar things in the UK, the EU, the EU, which now is actually working very well. But at the beginning, we had these dramatic pictures of Chinese and Italian planes landing in Italy, sending PPE equipment, which was, now I think the PPE equipment within EU borders really flows nicely. But the first 2 weeks was a nightmare. So yes, we will have to become more self-reliant, and especially when I come back to food, because food is so important. Without food, we all starve, right? Mm-hmm. And we have activist farmers who say, look, we need to make sure that countries, or at least regions, produce a certain percentage of the staple inside. Otherwise, we have a problem, because we see now certain Asian countries not being willing to export rice. I mean, but we can eat potatoes here.
Sure. Cornelia, a couple more questions, and then we will open this conversation up to the floor. I'd love to kind of get your perspective on your own prediction of the winners and losers when it comes down to the industry, or maybe even certain companies that you already mentioned. Many are talking about, obviously, the online education that hasn't been transformed for not centuries, millenniums. I think we've struggled with the introduction of the EdTech over the past 5 to 10 years, that even the big universities with the online courses, they thought that was the EdTech as far as they're concerned. That's the online education. Just come to us, buy our executive program online. We'll give you the certificate. We'll print it out. You pay us thousands of dollars. And here you go. You can stick that on your LinkedIn page as if you went to Harvard, Yale, or Oxford. Now, we really are seeing a huge movement and direction when it comes down to the proper online learning, which I was quite surprised that quite a few US universities announced that the students won't be coming back in autumn 2020, but the earliest they'll be coming back is the spring term, which is January 2021. And I think we're going to see more and more trends there. What are your predictions? And let's maybe leave this as the last question, predictions in terms of the winners and losers as far as the industries and the investment opportunities are.
Well, I would say certainly the tech sector, they are winners. I mean, be it in online, and I think we've seen the models created for online education, but we haven't really seen the content move that fast. I think we will see the content moving, and I think that's very important. But I would also see in the tech sector, it will also be the way they're running their business model is going to be interesting. You saw Twitter's results came out yesterday. They made a loss, although more people were on Twitter because they had nothing else to do. But the advertising revenue fell off a cliff. And a lot of their advertising revenue is travel, leisure, and all of these things that fell off a cliff. So they are certainly, they're winners. But Amazon did well, but it did not as well as it could have done because the costs exploded. So there will be. You look at the Nasdaq. The Nasdaq is up 21% for the month of April. The last time we saw that was in the 1980s. So yeah, the tech sector is certainly a winner. The oil sector will be a loser, but that will, there will be quite several bankruptcies. The banking sector, there will be quite a few losers in the banking sector because they're exposed to the bad sectors, right? Mm-hmm. That will all affect our pension funds. So we better start taking care of our own pension requirements than relying. So we will see real estate will change. We will also see winners. There will be some companies that are coming up and that can be snapped up. And that's where I see that actually the sovereign wealth funds, they're looking very hard, not only in the Middle East, also Temasek and Singapore and so on. They're looking at logistics, which is becoming very important. They're looking at pharma. They're looking at all of those sectors. So we will see some very savvy investors moving into the right spaces. But when I look at the markets now, I see how much the Dow Jones was up 18% for the month of April, and that just doesn't tally with the 30 million, more than 30 million unemployed in a country where 70% of the economy is driven by consumption. So when I look at that, I would say for people who want to go and invest now, that's a little bit like wanting to catch a falling knife. You might catch it, but you might also chop off your fingers.
Sure, thank you. And before I hand over to Tatiana, it just inspired me to ask you one question in relation to the investment. Obviously, with the launch of the Mayfair Investment Club, which is for the next generation of investors. These are not institutional investors. These are not even seasoned investors that have been around for 20 or 30 years with successful investors, but these are young individuals very much interested in maybe deploying 1, 2, 3, 4 million pounds and creating quite a diversified portfolio. Now, we know that in every recession, there are great investment opportunities if you arm yourself and surround yourself by the right advice, the right sort of infrastructure, and the experience and track record of those that have managed to successfully beat the markets in the down times. I think in the good times, it is easier. It's never easy, and there are no guarantees. What would your recommendation be to young individuals who are in a position to start their investment journey, you know, whether it's with us at the Mayfair Investment Club or whether it's another investment club anywhere around the world? Where should they be looking with the fact that they may not have deployable tens of millions, or they're not a big family office, but they really want to use this as the opportunity to learn, develop, and ultimately succeed as investors?
I think they should do two things. They should look at the mega trends, and then they should look which sectors will benefit from the mega trend, as we have discussed. Then they should also look at the companies, because when I look especially at the listed companies, the ones with reasonable gearing, not overly indebted, the ones with good management, the ones with well capitalized balance sheets, will be the one who are offering good products, be it big pharma or whatever, will be the winners. So if I started out, I wouldn't get greedy and go on this thing where I see a hockey stick and that it will all go up, because the hockey stick very quickly, when you turn it around, it becomes an L. And the other thing that I would say is, when you do that, you know, and when they're really successful and they become very rich, think of the less fortunate, you know, do the social impact investing as well. I mean, look at the companies, look at the management, look at the capitalization, but also then do some things with social impact. Don't let the third word fall off a cliff, and don't let the less fortunate in your own country fall off a cliff, because if you do so, it will come back to bite you.
Fantastic. Thank you so much, Cornelia. And I'll now hand it over to Tatiana. I understand we have quite a few questions. Tatiana.
7.
Thank you very much. Thank you, Cornelia. Thank you, Samir. So yeah, we have plenty of questions actually. So I'm going to pick up some my taste. So, and we will start from the question from Janil to Cornelia. And about emerging markets. So do you think the emerging markets will recover in a different way than the developed countries? If yes, in what way will the recoveries be different? And the continues the question, as a lot of money is infused across the US and Europe, do you think this money will be able to trickle down to emerging markets, or the emerging markets are in this by themselves?
Well, I think it will be harder for emerging markets. I mean, and they're the emerging markets with a good value proposition, like the GCC economies, for instance. But then there are the Bangladeshis of this world who are really, really hard hit. They won't get remittances. The fast fashion companies are not producing any fast fashion because we're all sitting at home. So for them, it is really, really hard. And I think the transmission mechanism there is bilateral aid and it's multilateral aid. It is the IMF, it is the Islamic Development Bank, it is the Asian Development Bank, whatever, the regional development banks. The problem we have here, as the budgets of all of these rich countries get so stretched, there will be huge pressure, and a lot of them are democracies, and even if a politician wants to do something, he also wants to get re-elected. So there will be a huge counter push for them to help. I hope we can get that multilateral infrastructure that we have, Bretton Woods organizations that we have since after the Second World War. I hope we can get that on the right footing again, but we need the leadership, and we also need the leadership of the US, which I at this point do not see.
Thank you very much. And the next question is from Boris, and actually the similar questions, but a bit from different angle. So it's about the risk of the EU disintegrating, Italy and Spain in financial distress, leading to a new Greek scenario, coupled with a new refugees wave. Could it all go belly up?
Well, that is something that I think we're all worried about. And I would say Italy and Spain are worse than Greece. Well, Spain not, but Italy is worse than Greece. Italy is the third largest economy in the EU now that the UK is out. It's the third largest economy. It also has a big industrial base. You look at Greece and Spain, they don't really have that. And they do tourism, they do real estate, they don't really have that they do some banking. They don't really have that industrial base. So losing the third largest economy is difficult. And so I think the EU has done something very wise. You might have seen yesterday the press conference of Madame Lagarde of the ECB and of Ursula von der Leyen of the EU, the new EU commissioner, oh, she's not that new anymore, where they said, okay, there was the mutualization of debt that both Germany and Holland said over our dead bodies. But what they're now doing is they want to have a rescue program for which they borrow on the books of the EU and which will be going through the EU budget and be front-loaded to work pretty much like a Marshall Plan. I think that could work, but if we don't get it to work, we have a problem. And just to go further, Emmanuel Macron, and I would everybody urge to have a look at it, gave a very interesting interview to the Financial Times 2 weeks ago, where he said, well, when you talk about the mutualization of debt, look what happens in times of great challenges when you're generous and when you're not generous. After the First World War, in the Treaty of Versailles, the victors were not generous, and what happened? What happened was Hitler, first the Weimar Republic, then Hitler, and then the Second World War. And after the Second World War, the US was extraordinarily generous and had the Marshall Plan. And the Marshall Plan was a beginning of 70 years of peace and prosperity in Europe. And it was the foundation of the global Pax Americana that we certainly had into the beginnings of this century.
Thank you, Cornelia. And I think we'll move to the money question. I will kind of mix two questions in one. So the question from Boris, inflation vs deflation. The amount of money printing so far is commensurate to the drop in demand and GDP, trillions lost, trillions injected. Even if oil does bounce back, would you still see inflation in the mid of long term? Perhaps due supply blockage until we see realignement of supply. But once supply is localized, like to 2021 to 2022, could you see inflation creeping up? And actually, the next question was about the dollar, like specifically about the dollar. What is the future of it?
Well, I actually would say yes. I can. I mean, that is the big question, and I actually I did a note this Monday calling it inflation versus deflation. And you know, in the short run, it's absolutely beyond the question that we will be in a deflationary environment. The question is coming out of this: will we be another Japan? Remember, Japan had very low interest rates, negative interest rates, and quantitative easing galore, and it turned into deflation. But it can also turn into inflation if you know, if food becomes expensive, if fuel becomes expensive. That's not a one-to-one put through into the PPI, into the consumer index. But if you have a lot of money chasing very few goods, obviously these goods will get a lot more expensive. So the danger of inflation is there. I don't see it at this point, but I think we would be foolhardy to just ignore it. I mean, we have to have it at the back of our minds. And that's where I think it's very good that both the Fed and the ECB have very clear inflation targets. And the dollar has been going gangbusters because there was a flight to quality. And, you know, when I look at despite of negative or low interest rates, people have gone into bonds, into fixed income, into government bonds. So up to now, basically, for the last 10 years or so, the blue chip companies which had good dividends became the new bonds because they gave you guaranteed return on investment. And nobody wanted to be in government bonds because they didn't give you any return on investment. What has happened now is when I look at bonds, it's no longer a matter of return on investment, but return off investment. If I buy a treasury, a 10-year treasury, if I buy a 30-year treasury, I actually get some yield. But I'm pretty confident that in 30 years or 10 years, the US can still pay me my investment back. So it's that return off investment, which is not the return on investment that I would, and there is the return on investment in many equities is not that guaranteed. And certainly in high yield, you know, in junk bonds and so on, it's not guaranteed. That's why they have a high yield. So in that sense, yes, and if you see money flowing into treasuries, yeah, obviously that's good for the dollar. The dollar has been doing very well. I would foresee that it's not going to do, you know, it will come down some, but still, you know, the US is still the largest economy, and with its investment programs, with its rescue programs, it's trying to address the issue. So in the short to medium term, yes, I see it coming down some, but I still see it as a very important currency.
Thank you, Cornelia. And the next question is actually very interesting for me. Also, it's from Julian. You mentioned a trend of deglobalization. How high do you see a risk of a Cold War scenario between the US and China?
Well, I actually think we're basically already there to a certain degree, aren't we? I mean, the whole trade, well, it was called a trade war, and it was not a trade tiff. It was a trade war. We are there, and it's not just what I'm worried about is not just the US and China. It's where is Europe? Where is the US? Where are the blocks? Where is US? Where is China? China is very clever. China is now working a lot with the BRICS, right? The Brazil, India, China. South Africa is working a lot with the BRICS. They have a BRICS bank. It's actually, the BRICS never existed. It was just a clever, Jim O'Neill, a clever economist at Goldman Sachs who created the term, which was a marketing gimmick, which turned into something. So you had, I would say, yes, and China also has the Shanghai Cooperation Organization. So I see some of the big emerging countries clustering together to a certain degree. And I think really, I really would like to see the Bretton Woods organizations being allowed, and the WTO, the World Trade Organization, being reformed and being allowed to do their jobs, and having all governments, especially the biggest economy in the world, behind them.
Thank you.
Tatiana, could I just, before you go on to the next question, this is very interesting what Cornelia said on the China-US relationship. Cornelia, I've had numerous talks on the EU-China relationships and the very bad anti-propaganda at the moment going in both directions. And the fact that the China is showing more and more interest in investment into the Balkans. And you mentioned something very interesting, 70 years of prosperity and peace in Europe, but you probably forgot about the war in Yugoslavia, which kind of disrupted the peace, which in an actual fact is really now coming back to bite Europe, because Europe stood back and did nothing until the Americans and NATO got involved. And I think that was a great shame that France and Britain and Germany sadly was really crippled and paid the price of the Second World War. Hence, they weren't really allowed to send the troops. And then the Dutch did what they did with on behalf of the United Nations and really kind of put a bad mark on the European thing. But now we are dealing with a situation where I'm having more and more conversations within China, the EU and the Balkans, how the Balkans could actually become a broker of improved relationships between China and the EU, because we know there is the Russian interest, you know that as well as I do, the American interest, the British, the French, now the Chinese, all happening around certain states of former Yugoslavia, but it's all very economically and soft power driven. So how this whole situation of coronavirus and everything is going to either improve or not the relationships between the kind of super regions and superpowers?
That's a very good question. And when I look at China, I always say, you know, you have to be careful with China. I've been doing the big study for a major organization on the Belt and Road Initiative. And the Belt and Road Initiative, the way it worked is China would give these countries money, but they in the form of loans. So the indebtedness just increased. I look at some of the investments. We were a little bit foolhardy in handing over intellectual property. And I probably am scarred a little bit, having built a manufacturing base of a high-tech thing like GE Energy in China, and having had lots of intellectual property stolen. So we need to work with China. They're the world's second largest economy, but we also need to be careful that this is they're very pragmatic, they're very state-led, and we need to protect ourselves in terms of IP, in terms of all sorts of things, and not be foolhardy in getting ourselves into a new neo-colonial dependence. That's what I have to say about China. And but it's really important that the regions work with each other. And again, you know, we have this framework of the United Nations, which really needs overhauling. But it is still, you know, it is still the only thing we have where we have all nations at the table and where we have all regions at the table, because nothing precludes you when you go into the General Assembly to speak to, if you're Serbia, to speak to Moldavia, to speak to and to come up with a consolidated decision. So I would say, yes, we need to find out a new way of creating an architecture, but we should in the meantime not ditch the architecture we have, which I'm a bit dismayed that the US has been ditching for quite some time. This has not just started with Donald Trump.
Thank you. Thank you. So actually, I'm going to mix two questions again, and it's about investment opportunities. So Mohammed asks, what are the good investment opportunities now and which asset classes? And Andreas Schwartz, our previous speaker, he asked, how important do you view gold as an asset class? And what is your view on the gold price and the importance of holding gold for private investors?
That's very interesting. I will be starting with gold. I also did a few weeks back a thing on safe havens where I talked about the yen, the Swiss franc, and gold, and so on. You have seen gold has not done quite as well as it could have done, but in a world where interest rates are zero or below zero, you know, usually the problem with gold was it's a nice asset, but in terms of return of investment. But it's a bad asset in terms of a return on investment. But when so few investments have a really good yield, gold is not, I wouldn't go in a big gold holding, but if you have something like 5% or so of gold in your portfolio, you are hedging, it's something you do, you're hedging against potential inflation. So if we go into a mega inflationary cycle, at least you have a little bit of your portfolio is hedged. But the problem was also, one of the reasons why gold didn't do so well, especially as we went into the crisis, was that there was not enough of the physical stuff out there. A lot of it was in ETFs, and so we've seen where ETFs can lead you with the WTI, with the American benchmark oil. But a lot of it was into ETFs, and very few people actually, except for the Chinese and the Indians, had physical possession of physical gold nuggets. So that's why investors got a bit frustrated with gold, because they couldn't get their hands of it. If they didn't go into an asset class which was highly leveraged, right? Which was leveraged, and we see, I think WTI has shown us where you can go with an ETF if it is based on a derivative, a future contract, and or leveraged, highly leveraged. So that much to gold. And the other one was asset classes. It's very difficult to say, but it is the things that people need. It is the food. It is the pharma, it is all of those things, it is tech, but again, it's all of those things that people need, but one really needs to look into the business model of companies. I'm a big believer, I've never invested in funds. I've never invested in, certainly not in ETFs. When a banker told me that, I asked them whether I looked like a charity, because the only ones making money out of them are the banks. But I would really, you have to understand the sector, the business model, and trust the management. And but I've always believed in bottom-up management. Now, this may not be the time to dump big loads of money into the market, because yes, we have seen this humongous increase in the Nasdaq and in the Dow over the month of April. But it's so disconnected from what's happened in the real economy with 30 million unemployed in the US that, what goes up comes down. So this is, again, investing now has a whiff of this, I'm catching the falling knife.
Mm-hmm. Could I agree with Cornelia on that, and very much. If you asked me 6 months ago, I would have definitely tipped real estate as one of the very, very low risk investments. And I would have been very wrong, because as we're now seeing, real estate on the commercial and the residential side of the equation, where nobody can move out of there, wherever they're stuck at right now, is going to have a sort of a longer term impact. And the uncertainty when the lockdown is going to be relaxed, what that means, whether we're going to have a second or third lockdown, and the sort of comeback of the virus, and how the rest of the world is going to sort of evolve. But something I never thought I would sort of take interest in is the esports. I mean, I'm a big fan of Formula E, and that was one of my big ambitions of taking it to the Balkans region, to really kind of rebrand Bosnia, but also the former Yugoslavia, by bringing something that's not just a sporting event, but that's very much plugged into technology, future, AI, and the investment structures around the world. And I've been absolutely mesmerized by the way in which the drivers of Formula E have taken their own initiative and teamed up with various esports companies, where they're engaging the fans of esports and Formula E to actually do that online with them. So you have a fan of Formula E, and you have a #1 driver in the world going head to head in the online races, where people around the world are actually tuning in and watching and helping them compete. So and this is what's going to bring me to the fact that I feel esports, online education, what Cornelia said, the consumer-led organizations and companies, things that are more of the necessity than a luxury, in a way, are going to be winners. I think the sport has had a massive hit, or anything to do with events. The Olympics have been sort of postponed. There'll be more and more of these postponements, but I think we're soon going to see sports coming back to be played behind the closed doors. Now, coming from former Yugoslavia, where hooliganism was quite a normal thing. I witnessed many times where certain clubs from the region were banned and had to play behind the closed doors with not a single fan. So I think the sporting industry is looking at the very, very interesting ways to reinvent itself. Having a base of fans, and obviously we all know Man City, Man United, Liverpool, Chelsea, all these big football clubs with huge fan bases in India and China around the world are working incredibly hard on bringing sport back to their fans and really kind of promoting the physical activity as something that's very important for your mental health. I think we are seeing mental health sort of affected across the board, from the young kids all the way to the older people. I think we've seen more and more campaigns about the importance of the physical activity for your mental well-being. I think we're going to see more and more of that. I'm quite hopeful that this is going to kick more people back into the fitness regimes and the certain exercises on the mindfulness than ever before. So I'm looking at certain apps and technological solutions which will allow you to really sort of work on yourself in these current sort of moments of crisis. But what was incredibly interesting for me a few weeks ago, I was at a webinar where there was a new app talking about the physical connection between the couples, and they're trying to promote the fact that you can have a sensual experience off the back of an app. And I thought, I mean, there's some crazy ideas out there. I'm going to watch closely how well they do, but they're raising the money in that kind of arena. So I actually think that what's happening right now, however difficult it is, and nobody can say it's not difficult, it's going to open up a vast amount of opportunities. I think it's going to bring us closer together, because in the war times, you kind of come back to your community. I remember my auntie going on the planes to Mexico to bring food during the siege of Sarajevo to her local community. It was like a military cargo plane just bringing the food for the city. So, you know, I think there'll be more opportunities. I think even with us at the Mayfair Investment Club, we are examining what these opportunities are for the members. So it's going to be interesting to see how the next few weeks to few months evolve.
I'm glad you said that, Samir, because I think it's very important that communities are sticking together, and especially investors don't just think of their return on investment, but they also think of the ones who are less fortunate, because we were all in this together. We're all in this together, and we're all attacked by the same virus.
Exactly, and I think, Cornelia, that's what fast-tracked our launch of the Mayfair Investment Club Foundation. I always wanted to do philanthropy as part of the investment club, and I had it in my timeline to do it a year on from now. But I just thought there's no point waiting for us to be, as the club, philanthropic and really encourage members, as you said, towards the social impact investment and philanthropy, because if we neglect the poor and less privileged, I think it's all going to come back at us one way or another.
Thank you very much. And actually, we have a quick question I wanted to ask you, Samir. That's the question from Mohammed. What investment opportunities does Mayfair Investment Club will concentrate on, and what is joint entry investment in?
Well, I kind of covered that in my previous thing. You know, we're going to be looking from, you know, a less risky investments, from bonds to sort of what as I just mentioned, real estate. We were going to be looking at a very specific and focused hedge funds and VCs, and of course the high growth sort of enterprises from London, Europe, and around the world, where we really, as Cornelia said, believe in the management. The management's got an incredible and impeccable track record. I think the more I look at the sort of investment opportunities, even inside the fund structures, if you are backing the company with, you know, not so great and well-experienced CEO and the management board, I think you are playing a gambling game. I think you have to really assess, to point of interview, all people at a certain sort of level of management before you would commit or make a recommendation to any of the members to invest. So it's going to be quite a diversified portfolio. We will obviously coach, nurture, guard, and guide the members towards certain opportunity through our own networks. But they will also have to do their own due diligence and make sure that their investment is as safe as can be. I mean, there are no guarantees in the world of business, in the world of investment, but there are certain guidelines, there's certain principles, there's certain systems and processes that any successful serious investor ought to go through, and that's what we'll also encourage and ensure.
Thank you very much. And I think we're going to have the last question as we have a time limit. So this question is from Elias Bukrami from Regions. Hi, Cornelia, glad to see you. Would you say that we have restructurization of the global economy and the investment menu? Is there a risk of injecting too much capital and liquidity at the risk of rationality? Would say the new absorption of investment and economies will be downsized. Thank you.
Well, I think there is a certain risk, and everything always has a risk. But you know, when you have a crisis, you just need not to throw the kitchen sink at it. I think we've decided we're throwing the bathtub at it. But the thing that there is, and you know, especially when I look at these loan guarantees that are going to be given by some of the central banks and some of the governments, you know, when you look at the SMEs, you need to keep them above. You need to keep them above water levels. But some of them are not viable going into this. So they will be much less viable coming out of this. So of these 10 trillion that we're throwing at it at this point, I'm sure we'll have to write off at least 30%. But that's the cost of doing what we're doing now.
Tatiana, we can't hear you. We can't hear you.
So, hello, yes, sorry. Sorry, I would like to ask you the last question now, the last question from Alessandro. We see that many countries are thinking about bad banks to offset the financial support they're giving to the national system. That seems that an old answer to a very new and disruptive problem. What do you think that the right guidelines should be to manage the global debt generated from the corona situation?
Well, I think the bad bank system is not a bad system because we already have really bad assets, and we have bad assets that have been on our books for a long time. So yes, the bad bank situation is not a bad idea to get it out of the system, which ties into, I'm pretty certain we'll have to write off at least 30% of what we're throwing at the problem now, because we're doing it at such speed that the whole credit procedures, and we don't see people, we do it online. There's a lot that you can't grill the management. Things are done at such speed and such vast extensively that some will stick and some will not.
Thank you very much. We still have 3 questions, but we have an option to answer it online. So
okay, let's do that.
Yeah. I think we're good on time now. It's 2 o'clock. So I would like to thank you. That was amazing, and it was filmed finally. If you want to say some last statements, you're more than welcome.
I just wanted to say thank you, and I want to say especially also thank for your excellent moderation, and especially also want to say thank you for Samir. It's always great to talk to you. I love the way you are looking at things from different perspectives, and I'm very glad that you're bringing the Balkans back in, because the Balkans are a very important part of Europe, and we must not forget them.
Thank you, Cornelia, for your very insightful contribution to today's talk, and I look forward to working with you in the forthcoming weeks and months, and wish you all the best in those times. Stay safe.
Thank you.
Stay at home.
Thank you very much. And for all attendees, just to let you know that next Friday we have the next E-Series talks with Dr. Shili Yu. She's political economist, board member, Harvard, and LSE fellow broadcaster. So we're gonna keep in touch, and we'll send you the email with all details. And thank you very much, Cornelia, again, and thank you, Samir. Thank you. Have a lovely day.
Thank you. Thanks. Bye-bye. Thank you.